In this video, we're going to be performing a bank reconciliation and recording the necessary journal entries after our bank rec is done. So what is a bank rec? Well, at the end of the month, or in today's day and age, you can hop on anytime to the internet and look at the current balance of your bank account. Well, I bet you that balance of the bank account isn't going to match the cash balance that you have on your company's books. Why? Because there's a lot of things that could happen that could cause a discrepancy between your book balance for cash and your bank statement. Some of those being a deposit in transit. If you deposited money in the bank and it hasn't finished processing, especially if it's a large deposit, they typically hold it for 3 to 5 days. You may recognize it on your books, but the bank doesn't know it's there yet. It's not showing up on your bank statement. That's one possible discrepancy. If you wrote a check and you sent it to someone and that person hasn't cashed that check yet, you would have taken the money off your cash balance on your books when you paid off as payable, but it wouldn't have come out of your bank account yet because whoever you sent it to, your vendor, hasn't cashed that check. If you collect or pay by EFT, electronic funds transfer, it's possible your bank knows about cash coming and going before you've put it on your books. That's the reason you could have a discrepancy. The bank automatically withdraws money from your account for all sorts of charges: a monthly service charge, check printing fee, maybe an inactivity fee for some of their certain services. They will take that money out without notifying you, which means it's going to be out of your actual bank account, but your cash balance on your books is still going to have that cash in there. If you have a savings account or a joint checking savings account, it's going to earn interest, and the bank's not going to notify you at the time to say we just added interest. It's just going to show up in your account and it's going to show up on your statement as interest earned. Well, you need to add that interest revenue to your books. NSF checks. If someone writes you a check and it comes and you're like, okay, we got paid, let's take this person's receivable off the books and recognize the fact that we actually got the cash. But then when you go to deposit it and the bank goes to collect, there's not non-sufficient funds, NSF, which means you put on your books that you received the cash, but the cash wasn't actually there. We're going to have to reverse that. That's a difference between your bank statement and your cash balance. And then lastly, simply errors in bookkeeping. It's really easy to transpose two numbers. It's really easy to forget to write a journal entry for something. Maybe something happened in your company where the cash came out of your bank and it simply just didn't show up in the right manner in your books. All of these discrepancies are reasons why we have to do a bank reconciliation. So let's do one for Patterson Pets. At the end of the month of April 20XX, their book balance isn't matching their bank statement. That happens pretty much every month. What happens is the accountant has to go through and look at the company's books, look at all their documentation, their purchase orders, etc., as well as, all the information in detail that's listed on the bank statement, and find the differences. Well, Patterson had this. They had a $9,000 deposit, which they made on April 30th, which the bank statement is not showing yet. They wrote a check on April 29th for $2,000, which the funds have not been withdrawn from their bank account. One of their customers, Mr. Neil Armand, transferred $100 electronically to them in their bank account, but he didn't notify the company. So our books are showing that he still owes us the money, even though he did actually send it to our bank account. Automatic payments, great convenience in modern times. Still, they don't tell you to put it on your books when it comes out. So in this case, National Grid withdrew $40 from Patterson's bank account for utilities. Cash is still in our cash account on our books because we didn't take it out to pay them. They just automatically took it out of our bank account. So we need to fix that. We have an NSF check from a customer named Mike Jones. Check bounced. So at some point we took Mr. Jones's receivable off the books and we said we had cash, but that cash wasn't actually there. And then lastly, the bank charged us $20 for their monthly service charge, but we made $30 in interest on our savings account. For a bank reconciliation, you start with your standard header, the company's name, the name of the document, and the date. We're going to separate it into two separate sections, the bank side and the book side. And for both sides, you want to start with the balance that is shown. So the bank side will be whatever number is on your bank statement. Let's just say that when Patterson Pet's bank statement came in, it had a balance of $12,720. The book side, you start with whatever the balance of your cash account is on the same day that you received the bank reconciliation. So our books are saying that we should have $20,850 in cash. That's a big difference. Let's figure out why. And we're going to start with the bank side. And the first thing we're going to do is add anything that we can to the bank side to help explain this difference. Well, there's only one thing that you are allowed in a bank reconciliation to add to the bank side, and that is deposits that you know that you made that are in transit. So we're going to put our deposit in transit from 430 on here, and the deposit in transit was for $9,000, and I put it right into the right hand column. But if you had multiple deposits in transit, you would total them up in the left hand column and then put the total amount of deposits in the right hand column. But for now, if we take our $12,720 beginning bank balance, add our $9,000 deposit in transit, we're going to come up with a no-name subtotal of $21,720. Let's knock that deposit in transit off our list and see if we can subtract anything from the bank side. And just like there's only one certain thing you're allowed to add on the bank side, there's only one certain thing you're allowed to subtract on the bank side. And that subtraction is for any checks you have that are still outstanding. So we wrote check 204 for $2,000 on April 29th, and it hasn't been cashed yet. But you know what? We know that we wrote it, and it's out there, and that money is going to come out of our bank statement. So let's put outstanding check on here. Again, we only have one, so we can put the number right in the right hand column. It was for $2,000. So after that $9,000 deposit clears and after the $2,000 is withdrawn from our bank account for this outstanding check, our adjusted balance of our bank account should be $19,720. Let's move on to the book side. Same concept. We're going to start with our adds. What things can we add? Well, first thing that we have is that Neil Armand over here, who is a customer. He transferred $100 electronically to Patterson's Pets in order to pay a debt. So he wired money directly into our account, which our bank knows about, but our books aren't recognizing. So let's add that receipt of cash by EFT from Mr. Armand to our books. That is 100. And we can cross that off the list. The next thing we have is National Grid automatically withdrew $40 from Patterson's Pets bank account. Well, that doesn't sound like an add to me if they're withdrawing. A $1,200 check from Mike Jones bounced. Well, if it bounced, we're not getting the money, which means we're definitely not adding it to our book accounts. It was already on there in the first place. We got charged a $20 monthly service charge. That's not going to work out for us as an add either. They don't add your service charge, they take it out of your account. That isn't going to be an add to our books. But we earned $30 worth of interest on our savings account. That's definitely an add. Getting interest on your savings account adds to the amount of cash that you have in there. We need to recognize this $30 that we received on our books. So our two adds are going to be a $100 receipt of payment from Mr. Armand via electronic funds transfer, and the $30 that the bank is adding to our account for our interest revenue. In total, we have $130 worth of adds. If we make a new no-name subtotal here, we're going to come up with $20,980. What can we subtract? Well, this is our last section that's left, and it's the three things on our list that we haven't yet accounted for. We had that EFT payment to National Grid, that automatic withdrawal, which was $40. Mr. Jones' check bounced. It was $1,200. We thought it was good, so we added that $1,200 to cash on our books at the time we received the check. But we never actually got it into our bank account, which means we got to take it off our books now. So let's reverse out this NSF check for Mr. Jones for $1,200. And lastly, the bank is charging us a service charge of $20, which means we have a total amount of subtractions of $1,260. Our no-name subtotal is $20,980, and if we subtract our $1,260 worth of subtractions, we're going to come up with an adjusted book balance of, ta-da, $19,720. And this is when you know your bank rec is right, because your adjusted bank balance should always be equal to your adjusted book balance at the end of the bank reconciliation. You can't just do the bank rec and say you're good, because it's not on our books. We got to put the stuff on our books. Well, if we're going to put it on our books, we're going to have to record journal entries. First thing you need to know is it's our books. We're not changing the bank's books, which means anything that's on the bank side of our bank reconciliation, we don't got to worry about. The bank's accountants can take care of those journal entries. We only care about the book side. And this is always going to be true. that anything that is listed under the add section on your book side is increasing your cash, and therefore cash has to be the debit in the adjusting entry that you are making. Anything that's listed in the less side is decreasing your cash. You're lowering the amount of cash that you have on your books. And since it's decreasing your cash, and cash is an asset, like all assets, you're going to have to credit cash in that adjusting entry to reduce your balance. So it's a nice little thing to look through. Only do the book side. Know that cash is always the debit for the add section, and that cash is always the credit for the less or subtraction section. Let's go one by one here, recording some journal entries. The first one that we had was the receipt of payment from Mr. Armand. Well, we didn't know that we got that payment yet, which means we would have had a receivable from him on our books for that $100 that he owed us. Well, now he no longer owes us. And since it's under the add section of the book side, we know that cash is going to be our debit. What's our credit? It's that receivable from Mr. Armand that we need to take off of our books. So the first adjusting entry for this EFT receipt from Mr. Armand is going to be a debit to cash for $100 and a credit to accounts receivable also for $100. The second thing in the add section is that interest that we're receiving. Debit to cash, credit to interest revenue for the amount of interest that we received. For the less section, we know that cash is going to be our credit. Let's start with the first one, which is that EFT payment to National Grid. Well, what are we paying for? We're paying for utilities. That's what National Grid provides us. So that company does. So in our adjustment, we're going to debit utilities expense and we're going to credit cash. We have that NSF check from Mr. Jones. Again, when this check originally came in, we took Mr. Jones's receivable off of our books because we thought that he paid us. Well, his check bounced. And I'm pretty sure everybody would agree that we still want the $1,200 from him, which means we need to put that receivable back on the books. He still owes us the money. So what is our entry here? Well, we're going to debit accounts receivable for Mr. Jones, again adding that receivable back to our books because he still owes it to us because this check bounced. And we're going to credit cash because that cash we thought we had in our bank account never actually made it there because it was a bump check. And lastly, that service charge. And this is kind of a point of contention. I've seen plenty of people that have done books where they have different expense accounts. So you would have check printing fee, bank inactivity fee, bank service charge fee expense. You would have a different expense for each component that you have. I'm not about that. I roll all of the stuff from bank expenses into an account just called bank expense. So in this one, for this bank service charge of $20, I would debit bank expense for $20, and I would credit cash for $20 when we recorded the April bank service charge.